Hi, I'm Ronnie Pannu, Director and Founder of Pannu Tax Disputes and Investigations. At Pannu Tax, we help our clients to resolve and manage all types of HMRC inquiries, disputes and investigations. It's clear since 2008 and the global financial crash that we've seen significant efforts, not just in the UK but internationally, by tax authorities seeking to clamp down on overseas tax evasion and avoidance by their citizens. So to get a feel for what it might mean for you if you have an offshore structure, bank account or asset, you have to look at what's been going on over this period globally as well as in the UK. So what this means for you if you have an overseas asset, structure or account is that from as early as 2016 we're going to see a significant increase in the amount of information that's automatically shared between tax authorities around the world. So the UK tax authorities are now likely to receive, perhaps for the first time, detailed information on your overseas assets, structure or accounts. If, for example, you have an overseas trust structure, then under these new provisions, HMRC was likely to receive details from your trustees of the nature of the structure and also, for example, any distributions that may have been made to beneficiaries in the UK. So if the UK tax authorities, as a result of all these international agreements, are likely to receive information, more detailed information in relation to overseas assets than ever before, what's been going on at home in the UK? The UK's response to tackling offshore tax avoidance and evasion could be described as a carrot and stick type approach, where the carrot has seen the UK tax authorities opening up a number of offshore tax disclosure facilities which have allowed thousands of UK citizens to disclose historic problems and tax liabilities relating to assets and structures overseas, with HMRC offering beneficial terms to encourage people to come forward. All of these disclosure facilities were closed on 31st December 2015. The stick in the UK tax authorities' response to tackling offshore tax evasion and avoidance has seen the introduction of a far more aggressive and punitive penalty regime that relates specifically to offshore tax liabilities. So under this regime, you can potentially face penalties of up to 200% of any additional tax that's found to be due. We're also seeing the potential for new legislation which will make it far easier for HMRC to criminally prosecute anyone found to have historic tax liabilities relating to offshore assets. We also have the possibility of further new legislation forcing UK taxpayers with overseas structures or assets to review them and to confirm to HMRC that they have no outstanding tax liabilities. And the message from HMRC has also been pretty clear, and that is that if you didn't take advantage of these historic tax disclosure opportunities, then you're likely to face a significant tax investigation when HMRC receives the information from the jurisdiction in which your account, asset or structure is held. So in my view, given all these developments we've seen internationally and in the UK, the real question you should ask yourself if you think you may have historic tax liabilities is, why should I not make a disclosure and try to sort out the past? So what should you do if you have an overseas asset, structure or account and you're concerned that there may be historic tax liabilities? My advice would be to have an independent review undertaken of your structure or asset by someone who's experienced in these matters and who's able to offer potential solutions to any issues that may arise, as well as highlighting the potential risks. I've seen many examples over the years of situations where structures have been set up, where advice has been received and they're tax compliant at that point. However, as time passes, circumstances have changed. So for example, people have moved to different countries, the UK tax law has changed, which despite everyone's best intentions has meant that historic tax liabilities have arisen, which then need to be dealt with HMRC. So if you have overseas assets or structures and you're concerned that there may be historic tax liabilities, or if you've had a review and you're now aware that there are liabilities, then there are still opportunities for you to make a proactive approach to HMRC. But because the offshore tax disclosure facilities have now closed, care needs to be taken in terms of making the right approach and ensuring that your risks are properly managed.